Thank you for attending today's partner webinar, SaaS FastTrack Program for Progress OpenEdge Partners. In today's presenters is Richard Stone. He's Partner Sales Enablement here at Progress. And John Miller, Sales Consultant at Delta Channel. And then we will close out with Paula Perez with the Partner Plus program here at Progress Software as well. And now, the basis for the SaaS FastTrack program for Progress OpenEdge partners, several partners have jumped on the SaaS bandwagon and are well into their implementation and offering. For those that may not have taken steps because they're not as confident where to start, or may have started but are at an impasse and need guidance to move forward, Progress has developed the SaaS FastTrack program. Progress has partnered with a third party, Delta Channel, to provide an online tool and program to help OpenEdge partners embrace SaaS, which includes guidance to help them determine the profitability of their SaaS offering and help develop a SaaS action plan tailored to their individual business. So with that, I'm actually going to hand this over now to Richard, who's going to take us through the program.
Thanks, Chuck. And once again, welcome to everybody. Thank you for attending this webinar. The agenda for today, Chuck's already done the introduction. I'm going to go through a couple of sections. First of all, just outlining the benefits and the challenges of adopting SaaS, and mainly the challenges. And then what is our answer to those? How can Progress help you? And that will be an introduction to the SaaS FastTrack program. We're then going to have a demo of the program itself, and then conclude with how do you get started if you want to take advantage of this program, and a Q&A section. And as Chuck said, please enter your questions in the questions box, the chat box on GoToWebinar, and then we will answer as many questions as we can, and those that we can't, we'll email you with the answers afterwards. So let's get moving. What are the benefits and challenges of adopting SaaS, and especially the challenges, because that's the main thing that's stopping a lot of partners from actually jumping into the water. So first of all, the benefits. It's what customers want. It's more and more customers are moving away from the old perpetual licensing model towards a subscription-based model because it gives them some very significant business benefits. They haven't got to go through a lengthy budgeting process to procure hardware and additional software, such as databases and servers. And also for smaller companies, it means tying up a significant amount of their cash in IT, in the hardware and the software infrastructure. It's easy to evaluate, very easy to take a demo version of the SaaS product and evaluate it, and it gives you fast time to value. There isn't the lengthy implementation process that you typically have with programs. The second reason is today it's actually much easier than it was even a couple of years ago to build and deploy OpenEdge-based SaaS applications. And that's because our development tools have become much more mature in that space. And also, we've got a growing number of partnerships with cloud service providers who know OpenEdge. So in other words, especially for smaller application partners who may not have dedicated IT staff who know the cloud, cloud service providers both in all the major regions are now able to actually configure an OpenEdge environment without actually the partner having to know the details about how to configure IP addresses, etc., etc. It's much easier for them to do it. And third, annual recurring revenue. This is really the big benefit. It's the gift that goes on giving. With SaaS, you get this recurring revenue as people renew their subscriptions month to month or year to year. It means that at the beginning of every quarter, you haven't got that zero revenue. It means you've always got recurring revenue, which will help you make the quarter's numbers. And it makes your revenue much more predictable. And you actually see this later on in the demo. What are the challenges? So this is the whiteboard from the boardrooms of many, many partners around the world. And they're basically, SaaS is a new journey. It is. It's a completely different business model. So a lot of the rules that you're used to have changed. The first thing that you're going to think of is, have we thought of everything? How do we know what we don't know? And what's the current status on the key elements of our plan? And just how do you compare with other software companies in this space? Are you looking at the same kinds of key features, key elements? How do you compare? Second, pricing. This is probably one of the biggest issues with SaaS is how do you actually price the offer versus your perpetual model, your current perpetual model today, or how your competitors are pricing their offers in your space. Do you take things like the existing contract value and extend that out, or do you look at it from the other perspective, which is the customer value? And what else should I really be considering? And we'll go through this in a bit more detail in a second, but a couple of factors which you probably aren't considering today become really, really important when you move into the SaaS world. And finally, the question you're asking is, okay, so we've got our pricing sorted out, we've got our go-to-market plan. What does that mean in terms of revenue? Because I've now got two revenue streams to consider. I've got my new sales, which comes in the first year, but I've now got this annual recurring revenue. And if any of you have tried to actually map this on a spreadsheet, you'll find that this gets very complicated very quickly. So this is something else that customers, partners are anxious to have some help on. So first of all, what are the 10 key elements of this SaaS journey? I'm not going to go through all of these. What you'll see later on when you see the FastTrack program tool, you'll see that all 10 of these elements are actually addressed in there. And it really is an excellent summary. It's for what it is you should be thinking about as you move to the cloud. And you'll see in the tool also, we not only tell you what they are, but help you map the progress of each. Let's have a look at pricing now. So many partners, when they start to look at SaaS pricing, say, okay, we get X revenue from our perpetual license from a customer. Let's just aim to get the same revenue from SaaS. So let's take a quick example here. Let's suppose you have an application which supports typically 30 users. You charge $25,000 for the license, and then you have an annual maintenance fee on top of that. Your implementation charge is around about $5,000, and you generally would like to keep a customer for at least 5 years. So when you do the maths on that, what you find is the lifetime contract value, the total revenue you get from that customer is $52,500. If you then map that back to the SaaS world, say, well, we still want to get the same lifetime contract value. If you do the maths now working backwards, you actually arrive at a figure of $28.60 per user per month over the 5-year customer life, or $10,000 a year if you decide to go with annual pricing. That, again, is something you're going to have to consider. Do I charge monthly or do I charge annually? If you map that, the two revenue streams, so your perpetual license revenue there is in blue, so you've got the initial sale of the software, which includes the implementation charge, and then you've got those 18% jumps in revenue. By the end of year 5, you get to your $52,500, and SaaS gets to the same point. You'll see I've done that as a straight line, the SaaS one, as opposed to the perpetual one, and that's for a couple of reasons. You may decide to charge your customers monthly, but also many companies recognize SaaS revenue over the life of the contract. So you don't recognize the revenue up front like you do with perpetual license. It's recognized over the period of the contract. So that's why it's a straight line. But as you can see, eventually you get to your $52,500. This is really important, the difference between the way that you bill perpetual and you bill SaaS. Because the problem with this approach is that it ignores something called cost of customer acquisition. That's the total cost, the amount of money that you spend in marketing and sales and R&D in actually acquiring that customer. And typically with your perpetual license, you will that is all taken up front off the beginning of the contract, and so the same thing will happen with SaaS as well. But look at what that means. With perpetual license, it means that you just simply make less money in year 1, and so that's why there doesn't tend to be that laser sharp focus on the cost of customer acquisition. But with SaaS, look what happens. It actually drives you down into sort of negative territory for about the first 18 months. So cost of customer acquisition, it becomes very, very important because you want to obviously minimize the amount that you're in the red there. It's worth pointing out another thing at this point. you now had to think about churn. If that customer decides not to renew in the first 18 months for whatever reason, it means you've actually lost money on that customer. Again, not something you typically have to consider in the perpetual license world, but something which you really have to think about in the SaaS world. So the new factors that pop up here, cost of customer acquisition and the churn. So that model may not be the best for us because, as you'll see now, you're actually leaving money on the table if you just simply use the lifetime customer value. And let me explain why. Let's look at it now from the customer's point of view. What is the total cost of ownership for that customer for your solution? So there's our $52,500, which is the license and maintenance fees, which the software, the ISV receives. But in order to run that solution, the customer needs hardware. They need servers, they need databases, and they also need IT services. They need people who can maintain the databases, can upgrade software, etc., etc. And over a 5-year period, typically $15,000 for the hardware and $30,000 for all the IT services. And so that means that the customer's TCO, the actual amount of money they're having to pay out to maintain the solution, is $97,500. So that's what the customer's perception of the value is. So let's say for our SaaS solution, then we want to make it financially more attractive. You'll hear in a second that just simply making it financially more attractive is not a particularly good strategy for SaaS. You really ought to be introducing new and innovative features. But as a starting point, let's just say we want to make the software, in terms of TCO to the customer, 10% less expensive. So we want to get the TCO out to be $87,000. And if you work backwards, you get to this. Their IT, there is no hardware. It's SaaS, so they don't have to buy any hardware. Their IT services is very significantly reduced because they haven't got to maintain databases, etc., etc. That's all done in the SaaS world for them. So their IT services drop to $5K. And that means then that instead of the $28.60 per user per month, you could actually charge that customer $45 per user per month. And from the customer's point of view, it's still a better deal financially. So when you're thinking about pricing, it's very important to think about these things, is look at it from different perspectives. And this shows here the difference that actually makes. So here now we've got the cumulative profit and loss for the customer, including the cost of acquisition and your hosting costs. And as you can see, that line is steeper. The SaaS line is steeper. Still going to make, it doesn't affect the cost of customer acquisition. That's fixed and outside of that. But it does mean that you see the little red arrow there, it means that rather than having to wait 18 months for profitability from the customer, it's nearer 15 months. So you just got to make sure that you, maintain the low rate of churn. The other thing is, at the end of 5 years, you actually end up making more money. This is the beauty of the SaaS model. Because the customer is losing so many of their costs, you can actually generate more money now than you can with the equivalent perpetual license. And again, that line continues to go up. So whereas the blue line just steps up every year, the orange SaaS line there will continue to go up at the same rate. So by the end of 10 years, you're making significantly more revenue off that customer in total than you would with your perpetual license. So that's pricing. The third thing is the market opportunity. And so you've done your pricing, and you've got your cost of customer acquisition figures, you've got your estimates of churn. You then plug that into the market opportunity. So the market opportunity includes what are your predicted sales into both your new and existing markets. What do you reckon you're going to sell in the way of that SaaS solution? And you plug it into your revenue projections, and this is where things start to get a little bit complicated, because in addition to now the new business revenue stream, you've now got ARR, annual recurring revenue. And again, another point here is you've got to start focusing now on renewals business, because it's ARR which is going to make the solution much more profitable for you. And then you get to your revenue plan. But what if something changes? What if your sales figures change? What if you change your cost of customer acquisition, or your churn numbers change? What if something changes? And this is where the SaaS tool is really going to prove its benefit to you, because you need to be able to quickly assess this impact. This is an iterative process. You go through your first pass with your pricing model and the market opportunity, come out with your numbers, and then for business planning purposes, you do a series of what-if scenarios. So it's really important when you're actually going to market with these solutions to be able to adjust the numbers and see what happens to your revenue plan. What's the impact to your revenue plan? So those are some of the challenges, making sure you thought of everything, pricing, and then once you've done all that, so what does what does the revenue plan, what does the business plan look like for this product? Our solution is this, the SaaS FastTrack program for Progress Partners. As you'll see in a second, a very comprehensive set of tools that helps you plan, execute, and measure where you are in your journey. It's actually a set of online tools that allow you to plan your journey and measure where you are, which is really important. But it also allows you to tailor all the inputs to your own particular business. There are a number of SaaS tools out there which are generic. They'll give you rough numbers which you should be thinking about, but you have no real ability to change those numbers. Here, with this tool, you can actually tailor it to your individual business. It's very flexible. You can do as much as you want at each part of the tool, and you can do all your business planning, all your business transformation planning in the tool, or just selected bits, and you can go back and you can update bits as and when you require. And it gets you started with templates and powerful models. And also throughout the tool, you'll see suggestions and recommendations about the numbers you should be thinking about and what is the appropriate values to put in various of the fields. So we'll give you more details on the cost and how you actually order the program in a moment. But first, I'd like to hand over to John Miller from Delta Channel, who's going to show you a demo of the tool.
Hello, my name's John Miller of Delta SaaS Services, and I'm here today to take you on a tour of SaaS FastTrack, a new tool custom built for Progress Partners to help you on your transformation business journey, hopefully to make it faster, with less risk, and with higher margins. You may well be a software developer or providing services. Regardless, your business model has a parallel but custom journey with a similar destination which will be based on recurring revenues. SaaS FastTrack has been developed to help you plan, execute, and review your journey's progress and guide you successfully to your destination. Of course, any journey has a combination of both opportunities and risks. The opportunities to move to annual recurring revenues and to have a higher company valuation are very attractive. In addition, there is the opportunity to develop new SaaS cloud-based products, to enter new markets, and of course to win new customers. And if you can achieve it, to sell at a lower cost of sales. There are, however, associated risks. The first, which we will see during this tour, is the potential impact on cash flow. You may well need as well new different types of skills, development, sales and marketing. And of course, if you're offering customers a choice of a new SaaS or cloud-based solution, there is also the opportunity for your competition to compete. It will be a long journey in our experience, maybe 2, 3, 4 years, and it will impact every part of your business. So SaaS FastTrack has been developed to enable you to make those really important go, no-go decisions, to see the impact of your changes, to explore what-if scenarios. This will enable you and your management team working with your Progress account manager to see the big picture and also to keep in sharp focus the pathway to your success. So let's start the tour now. When you arrive into SaaS FastTrack, this is in fact the landing page, and you will see a series of steps that take you through the journey. So we start with understanding the current status of your business today on the SaaS transformation journey. We will look at the new SaaS and cloud-based solutions. We will then take that and look at some financials, some pricing, some cash flow implications. And if we add that to the market opportunities, your existing markets today and potentially new market opportunities, the opportunity to transform and transfer your existing customers to SaaS and cloud solutions, we'll then end up with a complete picture and a complete revenue plan for your journey. And as we said in the introduction, this is also an execution and review model. So let's start at the beginning then. Where are you today? Based on our experience working with many SaaS and cloud-based businesses over the last few years, we've identified what we believe to be the most important 10 critical success factors for you today and during the course of your journey. So it seemed a very sensible place to start looking at each of those 10 criteria. Just to get you familiar with the tool, you will notice on most of the pages there's a little information icon, which will give a little bit more background and explanation as to what each step of this journey means and why it's been put in place. So the reason we suggest you start with the current status is to ensure that you and all of your internal stakeholders, be they sales, marketing, development, services, and your progress account managers, all have the same view on where you are today and the direction that you want to go, so you're all on the same page. You will see that as we enter our assessment of where we are today, it also helps us benchmark ourselves against similar organizations so you can understand relatively where you are on your journey. And I think when we said there are 10 critical success factors, these are the headline ones, and what it's going to help you try and do is identify and prioritize the areas that you need to focus on. And last but by no means least, as I said during the review stage, it will enable you to come back on a regular basis and use this as a dashboard to see how far you have progressed. So now let's look at each of those factors and have a brief chat around each of them. The first, of course, is how complete is your business transformation plan, and you will see that we are saying that this is going to impact every part of your business. So the way this assessment works is that you can have a rating from 1 to 10. So 1 would really be saying you haven't started, haven't really thought about it. 10, on the other hand, would say it's complete, it's best practice, it's all working really well. So for each of these criteria, we'll give ourselves a rating. So for the purpose of today's demonstration, we'll say we've rated ourselves a 3, and you'll immediately see the small donut at the side has turned red. We use a very simple traffic light system, so lower scores are marked red, intermediate ratings will be orange, and if you're a higher score, it'd be in a green sector. There's some additional help available on these pages as well. So if I click A for analysis, this gives a little bit more of an explanation as to what's behind each of these questions and why it's important. So we started out saying that it's important to have a complete business transition plan. If we move down to the next criteria, which is what type of SaaS and cloud business model do you want? So we're not just talking here about labeling a product as cloud or moving from a perpetual license and looking at annual subscriptions. There are many different types of business model around. I'm sure you will find companies that you may want to benchmark, but it's important again that you and your customers have the same idea of what type of business you're moving into. And talking about your customers, we really think this is very important early on, profiling your customers, understanding where they are at on their cloud and SaaS journey. We've worked with many vendors and partners who are seeing customer demand increasing all the time for SaaS and cloud products and solutions. If not today, it's certainly a part of their future strategy, and they of course want to know how you align with that. So in this particular case, we could for example say we think we're quite well advanced, so we've rated ourselves a 6. And of course, aligned with that would be your cloud services plan and development plan. So how complete is that in terms of testing, support, costs and timings. And talking about costs and timings, the fifth factor that we put into play here is around your SaaS and cloud financial models. We will demonstrate this in a few moments, the impact of pricing, of churn rates, and the impact on your cash flow. So it's absolutely vital that early on that you have built, tested, and used realistic data to understand the impact on your business's finances. So let's go down the other side now. We've talked about the opportunity for SaaS markets and exports. As we'll say detail later, it is of course a two-edged sword. It is very easy for you to get into export markets, but it's also very easy for your competition to come into your market. And we'll look at how we segment that between new and existing customers. SaaS and cloud services values. You will see with very many SaaS and cloud solutions that customers put a very high value on perhaps a relatively small subset of the features and functions, perhaps as small as 20% of the total solution they'll use and value on a regular basis. So I think it's important that you understand that and are able to put an asset and a value price to that. We talked about as well development of your resources. That may mean bringing in, hiring new resources. It may mean training. It may mean exploring outsourcing of offshore development options. And once we've got through all of this, and hopefully we've now developed a solution that customers want and need, it's really important to have what we call a killer value proposition, a cloud value proposition. It's already too late just to merely label it as being cloud, so we'll spend some time later on looking at what your differentiators might be. And last but by no means least, of course, you're going to need sales and marketing plans to execute these, to have the sales and marketing processes developed and the training in place. So this is an exercise we would suggest that may be undertaken by all of your management team, development, sales, marketing, services. I'm sure your progress account manager may have some input too. And this, as we'll see later, enables us to focus on the priority areas for development. So now we know where we are and hopefully have had a discussion at least about the direction and business model we want to develop. We now want to turn in some more detail to the SaaS solution itself. So in this part, we have the opportunity to describe and highlight the features of this solution and cloud platform, and very importantly, to look at the specific features in the solution that are only available in a cloud and SaaS solution. We quite often see people who just transform an on-premise solution to the cloud, and there are perhaps even fewer features than in the previous version. We deliberately haven't here put details in, but there are plenty of good examples of what new cloud and SaaS features look like, and very importantly, how to differentiate these from your competition. As soon as you get into SaaS and cloud, you'll find a whole new world there of people offering complete competitive solutions or partial alternatives. So an important exercise to document and then to test and discuss with customers and prospects your value proposition. So let's move from that now further into this section and start to look at some of the basic commercial discussions that you need to have. One of the fundamentals, of course, is are you going to be looking at monthly or annual subscription periods? You may want to start thinking about and do some very simple calculations on what price per subscriber would be appropriate to charge based on your development costs, based on competition, and as we'll see in this financial model, we can go back and forth and do what-if scenarios here. And we will, of course, want to base these models on what might be typical numbers of subscribers. Of course, if you have an existing on-premise solution, you will already have a good idea of what your average number of users might be. We have entered here as well the opportunity to discuss the maximum numbers of subscribers. This isn't used in the financial calculations, but the reason we mention it here, and there's a little bit more information in the icon, is that it will have an impact on scalability, and it may well also have an impact on the volume pricing model that you want to put into place. And two perhaps new but vitally important features in terms of SaaS and cloud commercials are the cost of customer acquisition. This may be a new term or phrase to you, so there is quite a detailed explanation of what we mean, and it is and will be a very different figure to your current cost of sale. But again, we can see that we can easily edit what that might be and put in an ideal figure. And alongside that, we've also got something churn rate. This is how many customers you're going to lose per month, per year in a given period. And of course, this is going to have a major impact on your profitability and the rate at which your annual recurring revenues will increase. So again, I'm going to show you how easy it is to edit these figures and to put in a different figure. These are all put up front because these are the most sensitive commercial figures that you'll be dealing with, and you will see that these are automatically then calculated into the cost of the overall SaaS solution and will have a major impact on your cash flow. So that's why they are singled out here and discussed up front. So talking about that, now let's go and look at some pricing of your SaaS and cloud solution. You will see that we have put alongside here an existing on-premise solution. Now this might be your own on-premise solution, it might be a competitive on-premise solution. And alongside that, we've put in the new software as a service or cloud-based solution that you're offering. And where we can, we've tried to align like-for-like prices in the build-up to the configuration and to the total solution. So let's go down some old familiar territory. So for our existing on-premise solution, there will be an upfront capital cost, if you like, of the software license, maybe of databases, middleware, servers that we can see is represented here. And again, it's very easy to edit and to change these numbers. So in this particular case, we would say that was 45,000. There will, of course, be implementation costs for an on-premise solution. And we also know that there are software support costs. We put what's perhaps a fairly typical industry average here of 20%. And for an on-premise solution as well, there will be additional hosting costs, data admin, support, IT costs. We put a fairly nominal figure in here per annum of 2,000. And then finally, for an on-premise solution, there will be the opportunity for value-added services. Now these may well be the traditional ones such as training and some other types of maybe business consultation, but they should be added in there. Now as we move to the software as a service column, you will see some figures have been pre-populated, and just to remind you, that's from the prior commercial discussion that we had. So as I say, we're going to be charging here £600, and again you'll see we haven't put any units on it, so this could be dollars, pounds, euros, 600 per annum, and we're basing it on 20 subscribers with the cost of customer acquisition being 20% and a churn rate of around 5%. So these numbers are carried forward, but we'll show you that you can easily edit them in this pricing section here. So that's brought that forward, 12,000. Implementation costs, you could argue, could and should be less in a SaaS or cloud solution. So let's just reflect that. Another discussion for you, of course, is the whole idea of SaaS and cloud is to land and expand, and it may be that once they're on board that you don't really want to have a significant annual rise in the subscription rate. But this model allows you to do that at whatever figure you think appropriate. And likewise, you could argue in terms of IT, hosting, that is included in the subscription rate. But this gives you the opportunity to add in any additional costs or charges in that area. And finally, there's the opportunity for value-added services. As I said earlier, these may well be different. If your solution is very intuitive and there's inbuilt training, then maybe the training services opportunity isn't as large, but there may well be other opportunities, for example, in terms of legacy data, integrating cloud solutions and applications together. So we put some numbers in, and what we're going to do now is to compare the overall cost of the on-premise solution with the overall cost of the software as a service solution. And the way we do this is we look at the lifetime contract value over typically 5 years. Now, some customers who traditionally have on-premise, if they're in specialist applications, I don't know, like banking or maybe public sector, may keep their solutions for 10 years. But typically it's around 5 years. And also typically in SaaS and cloud, you will see that that's a good window to look at the lifetime contract value, which will be the lifetime contract value to you as a partner, but it also reflects the total cost of ownership for the customer. And if we look at this chart here, we'll see year by year the difference between the perpetual in the blue colors and the SaaS solution in orange colors. So we will see, as you might expect, that initially the perpetual cost of ownership is more expensive. There's more upfront costs, and then the SaaS starts at a lower level, which is good news for the customer, but as we said earlier on, from your point of view, with cash flow, we'll have some implications. But we'll see year on year in this particular model that as we get towards the end of the 5th year, that the lifetime contract value is actually higher for the SaaS-based solution than for the traditional on-premise. And of course there are many variations on this, but it is quite typical that in these middle years, around year 3 or 4, that a SaaS solution is going to cost more. Having said that, and one of the comments we've made at the bottom of this particular model is that there are 3 possible outcomes: that the on-premise solution costs more, that it costs the same, or it costs less. But importantly, there are, of course, the many intangible benefits of SaaS and cloud in terms of scalability, flexibility, always being able to update and upgrade, the fact that mid-life on-premise systems will need perhaps some major refreshments in terms of hardware and so forth. But a very powerful tool for you to use internally, to use with sales teams and to use with customers, and very easy dynamically to see the impact of what-if scenarios. So, for example, if I just alter this figure here, you'll see dynamically everything's being updated for you. Okay, so now hopefully we've got a solution identified, we've got some components and pricing together. Let's now look at the market opportunity. And we do this on a slightly different basis. Obviously, a typical life cycle for a customer might be 5 or 10 years. When you're trying to build your business and you're trying to do sales forecasting, it's perhaps not as easy to see that far out. So when we're looking at sales targets, we look initially over a 3-year period, and you'll start to see the impact of that annual recurring revenue, and after 3 years you should be through the worst of the cash flow hit. So we've segmented it into 3 years, and for each we'll initially have a discussion about the market sectors that we want to address. So there's the opportunity here to define what your sectors might be. So you might want to put in place some existing customers for a pilot. You might want initially to focus on a subset of your existing markets to make sure you get those first few wins. And then, as you'll see underneath, we've got the opportunity to project how many net new customers we might win with a new SaaS or cloud-based solutions, and also how many and how we are going to transition our customers. So it would obviously make sense in this example to, in the first year, to get a few customers in both categories to ensure we can handle legacy data situations, to ensure that we're not seeing any issues around churn. But clearly in second and third years, we might want to increase the different market sectors that we're looking at. We may also want to take the opportunity to look at export markets, and so on. And then obviously by year 3 we would hope that there's a very strong program to transition customers, unless there's a good reason. You don't want to be supporting multiple platforms, multiple versions, and obviously the related issues of cost of sales and support. So it may be that you even want to, obviously depending how many customers you got, accelerate and increase that. But this enables you to model where the business is going to come from, and as we scroll down we'll see again that we have a model here that has then projected the new sales and the sales revenue, and we split it into a number of bands. So we've got annual recurring revenue, we have new sales, and then we have a total sales revenue, and we'll see year on year how that builds to provide us with a very strong annual recurring revenue run rate. So we've now looked at market opportunity and at the rate at which we can grow sales. We're now going to move forward into what we call a revenue plan, which really summarizes everything that we've done in all the previous stages. So the first thing that we will have achieved is that we will have, sorry, scroll down too quickly, we will have identified from where we are today how we rate overall on those 10 critical success factors. So in this particular example, the industry average was 4.8, our average is 4.6, so we're a little bit behind the curve. And you will see here as well we make some further analysis of the 3 lowest ranking assessments that you had in that first section. We choose 3 simply because there's no point pushing all 10, and if these 3 are the most important, these are the ones that you want to start to make an action plan. That's really what this section is all about. If we look here now, we will see that underneath each section we can make an action plan. So we've got actions, owners, due dates, comments. We can indicate whether tasks are unscheduled, whether they're complete. We can remove tasks. We can add new actions by simply clicking on this icon. So the whole idea is, once we've got the model and the base plan intact, is to then start execution and to use this this plan on a daily, weekly, monthly basis to document and to detail those actions. So as we see, we'll come down each section and we've got a summary here of the solution itself, the criteria that we're working on. So cost of customer acquisition at 20% is quite aggressive. So right behind that might be a whole amount of detail in terms of how you're going to re-engineer your end-to-end sales and marketing processes, systems, resources to meet that target. And obviously the churn rate as well. This is theoretical to start with, but what are you going to do to ensure that you keep the majority of your customers? And here we are again looking at the solution pricing. Here we've replicated the total cost of ownership, and I'm sure again there will be many actions and discussions to have beneath that title. So here we're talking about reviewing the services pricing model. We talked a little bit, didn't we, about the opportunity for different types of value-added services. And then there's the market opportunity growth with the detail of each of those years. So this is meant to be a living document, and if I move back to the top just in terms of navigation, you will see that there's the ability to save multiple versions of the plan. I believe it's up to 10 different versions, so you might want to have perhaps slightly different versions for different teams or for quarterly reviews. There's the ability to print the summaries. There's the ability to print or to have a PDF version of your plan. And if you have any technical questions, there's also a support tool. So in the last few minutes, hopefully I've given you an overview of SaaS FastTrack and how it can help you with your journey, not just the initial planning, but the execution and review. I look forward to discussing with you any questions you may have, so thank you for your time.
Thanks, John. That was great. So now we're going to talk about how the partners get started with the FastTrack tool, and I think you're going to all find this process very simple. The first step is placing the order. We're using the progress.com public website. The URL is noted here on the slide. It's simply www.progress.com. It's the OpenEdge SaaS site. Simply access this when ordering via the URL. You will order the subscription online with a credit card, and you will then be given a registration code, which is the key to accessing your online subscription. Now, you must remember to register the copy and share this registration code with all of your sponsored members. Now, you have a total of 10 sponsored members, including yourself, that will have access to each of these subscriptions. So how does the pricing work? The normal cost is $9.95. Progress has worked with the vendor and revised the pricing down to $5.97 for our Partner Plus partners. Furthermore, if you choose to use MDF, Marketing Development Funds, which we encourage, we'll offer you a rebate to bring your cost down to $2.99. So let's talk about MDF. MDF is a program under the Progress Partner Plus program. This slide details the reimbursement process, and for those of you who have utilized MDF in the past, it's a very similar process. However, the key difference is that any partner in the program qualifies. There are no prerequisites regarding revenue, levels, etc. So we really want to encourage everyone in the program to participate in the SaaS FastTrack reimbursement process of this program. The form is found on PartnerLink, the partner portal with the MDF forms. We've created a separate form called the SaaS FastTrack reimbursement form. And this is an example of that form. So very simply, go to the Progress public website, purchase your subscription online, use the registration code for all 10 of your subscriptions. Keep the proof of purchase and submit for 50% reimbursement to Progress. Access the SaaS FastTrack reimbursement form and submit to Progress. We have really tried to make this as simple as possible for you to get started. If you have any questions, please contact us. Back to you, Richard.
Thanks, Paula, for that. So just to summarize, the SaaS FastTrack program, it does address a number of key concerns of many partners. The partners I've spoken to, one of their key concerns is, pricing. How do I actually price my SaaS business so I don't drive myself out of business? And I don't want to leave money on the table here. So the SaaS FastTrack program will allow you to measure and do your what-if scenarios there. It's actually, this FastTrack program is actually part of a much more comprehensive partner enablement program for SaaS, which you can access through the URL down there on the public website. And in that website, you'll find white papers, blogs, webinars, videos, almost everything you need to be successful in this space. And not to forget, of course, the great OpenEdge development tools that you have. So what should you do now? So take a look at the pre-recorded demo that you'll find on that website, or contact us. Either use the contact us on the website or get in touch with your account manager, and we should be able to answer any other questions that you've got about the program. Once you're ready to order it, go to the website that Paula was talking about, sign up for your company. As Paula said, the subscription includes 10 users. So whoever signs up plus 9 other users, and you'll all see a common view of the tool. But of course, it's unique to you. It's not been shared with anybody else. Finally, as you work your way through the tool, there are a number of places there where you may need help. The tool does include analysis and recommendations, but if you do need more help, again, just use one of the contact us links in the tool, or get in touch with your account manager. So with that, I'd like to hand you back to Chuck for the Q&A session.
Thank you, Richard, and thank you, John and Paula, as well, for your segments in this webinar. We're going to be moving into the Q&A, and we also have another person joining us, and that's Tanya O'Connor. She's here with us in the studio as well to answer your questions. She's the product marketing manager for OpenEdge. As a reminder, if you have any questions, if you could submit those through the question interface and in your panel. We do have some questions that did come in, and I'm going to start with those. And then, again, any questions, just submit them in your question panel. One of the questions is, does the tool help suggest a monthly fee per user for your application?
Hi, Chuck. Sorry, it wasn't clear who you're asking that question to, please.
Anybody that could answer, either Richard or John.
Yeah, this is Richard here. Yes, it does. It helps you validate the answers. So what you do basically is it allows you to start at a certain point, whether it's, as I was saying on the earlier session, whether it's with the lifetime contract value or the TCO, and then it'll then allows you to see what the impact of that is on your overall cash flow and revenue, and then you can go back and change it. So yes, it does help you actually fix the price for your offering such that you maximize your profitability and the value to the customer.
Yeah, no, I'd agree with that, Richard. I think that's one of the most powerful aspects of the tool. You can do as what-if scenarios and work backwards and forwards. So, yeah, I think you covered it.
Another question came in. We do not qualify for MDF. Can we still buy the tool? This one may be good for Paula.
Yeah, so thanks. That's a good thing to reiterate from the presentation. The MDF is available through this program to anyone who is a member of the Partner Plus program. So that is the only qualifying criteria. So member level and above qualify. There's no revenue qualification criteria, and any tier within the program qualifies as well.
Excellent. Thank you, Paula. And then a question that came in. Why is there a charge for the SaaS FastTrack tool? Why doesn't Progress offer it simply to the ISVs for free? Maybe I can pull you in, Tanya, on that one?
Sure. Well, the tool itself actually was built by Delta Channel, and it is an offering that they provide to the market. And they actually, as was mentioned earlier in the presentation, they offer it to the market at a rate of $9.99. So it's not something that Progress actually developed. We're working with them to bring this to the partner community, and we've done quite a bit of work in terms of negotiation with Delta Channel, and then offering the MDF funds to try to make that cost as reasonable for the partners to be able to utilize this business planning tool. I think once you really get in there and start looking at it, you'll see that it is really highly valuable, and it really has a lot of sophistication in terms of the formulas that it's using, and really is a business planning tool that you can use across the business. So I think that $300 is an exceptional price for the tool, and I don't know that it's something that you could get otherwise.
Thank you, Tanya. Another question, maybe Richard, towards you. Is there a demo or a trial version that we can look at first?
So there's a couple of things here. There is a video tutorial on the website, so you can go and look at that. Partners can contact their partner account manager, and the partner account manager can organize a demo for them as well. So those are the two ways that we would suggest they move forward. There isn't a free trial on our website, but there's plenty of tools available to evaluate the tool before actually making the purchase.
Excellent. Another question came in. Are there best practices that you would recommend for companies to reduce customer churn? I'll throw that one out there.
I would say absolutely yes. Churn is the biggest enemy of SaaS. And so typically when you move into the SaaS area, it's really, really important to have somebody who's focused on existing customers, a customer advocate. All the best SaaS companies do that. They don't just focus on acquiring new business. They have a laser focus on making sure that their existing customers are happy and continue to use not only the existing user, but also to grow the user base. Remember, every extra user is an extra, $20, $30, $40, $50 a month. So yes, I would say the biggest single factor is making sure that you look after the installed base, monitor what they're saying on the website if you have a community, and be very quick to react to issues with your current customers. That's the best way to reduce churn. And of course, making sure that the product does what it wants them to do.
Excellent. Thank you,
Richard. Yeah, this is John. I'd agree. Constant contact, we call it constant contact. And also the great advantage of SaaS and cloud is the ability to update and add new functions so that the product's always fresh. Those two are key. I agree.
Well, we're at the top of the hour, so I want to be sensitive to people's time. So any other questions, please don't hesitate to outreach to your Progress partner account manager, and we'll certainly get back to you. So again, thank you for joining today's webinar, and hope you'll take advantage of this heavily discounted tool, very powerful tool. Thank you.